You're very welcome, and thank you for joining me on the latest episode of the Informed Decisions podcast. 346, the show goes on. We'd no episode last week. It was a bit of just did not get at it, to be perfectly honest. I ended up with lots of internal meetings. Many people are working there, Paddy. There's three of us, but yeah, few internal meetings, and I had an exam Monday evening, and I was on the Expat Taxes podcast. I was interviewed by Stephanie Wickham on the Expat Taxes podcast as well last week. So there's a bit of preparation for that. It's interesting being a guest on someone else's podcast. It's a different kind of experience, of course, and a different kind of pressure, if that's the right word. But I thoroughly enjoyed it, speaking to Stephanie about accessing and the different types of financial advice in Ireland. So I don't know when that's going out, but I will share it here. Pat Taxes is the podcast that Stephanie does. Very, very decent podcast, and she knows her stuff, to be fair. So that was last week. So apologies if you missed it. We have a bank holiday coming up. There'll be none then as well, of course. But yeah, other than that, I hope life is good. This week, I am sharing a piece around unregulated investments. I've wanted to do this for a wee while, and I wrote about it years ago. And I was quoted in the Independent, I think, a couple of weeks ago, talking about unregulated investments. The news was breaking that week around Arena Capital and the potential loss of investors' funds via unregulated investments there. So it has very much been in the headlines recently. And if you read, the weekend papers, you'll see it was covered again there at the weekend in regards to some of the companies and the potential issues and the lack of funds that investors are going to get back. So I wanted to just share a little bit about unregulated investments this week. Some of the facts, some of the fees that are paid, and what to look out for, because it is a murky world. You've regulated firms selling unregulated products, you've commissions, you've got lack of clarity around whether something is regulated or not. So I wanted to share some specifics around all of those things to help try and keep it relatively concise, because I have meetings to go to. Very important internal meetings, of course. Okay, so, I'm going to outline who is investing in these unregulated investments. Maybe if you're listening, you've invested in some, and the realities around the fees, the structures, and the capital at risk. So what type of investors are investing in unregulated investment products? And it's going on all day, every day. It's not something that happened, back in Custom House Capital time and doesn't happen anymore. It does. Every day of the week, I would guess, right? It's going on. People are investing cash. Unregulated investments are not some, back of a van where you're handing over wads of cash. These are legitimate companies, many of which are regulated by the Central Bank of Ireland, selling products, investment opportunities, including EIS schemes, to individuals out there. And so many people invest in them knowing that they're unregulated and that the capital is absolutely at risk, and there's reasonable chance that this mightn't work out well, as in losing capital, never mind returns. But it would appear, a lot of people who are investing in them that aren't clear around some of those aspects. So my intent is to try and help educate. The latest one, Arena Capital Investments, potential loss of, that's been covered in the media, and other type of funds like these. People who invest in them aren't necessarily, ultra wealthy, ultra high net worth individuals that can afford to lose their capital. Many are, ordinary savers. I hate to use the word ordinary, but like regular savers, that are not of the ultra high net variety, people who maybe trusted their accountant or financial advisor or tax advisor to put them on the right path and into a suitable investment. And many were aware of the risks associated, but very few probably thought that it was a real risk, a real thing. Wanted their hard-earned savings to work a bit harder. So why do people invest in unregulated investments, you might ask? Why don't they just go to their banker advisor and buy a regulated investment or a regulated fund instead of these, somewhat sophisticated, somewhat sexy, razzle dazzle opportunities? And my opinion is that many assumed that their professional advisor, whether it's tax accountant or financial, if they're getting advice from them, then this is a safe thing to do. That's my take. Brokers and accountants and others that are recommending these products are typically heavily incentivized by the product provider to sell these products in return for commissions. So these advisors encourage their clients to invest. Say, here's a really good opportunity, or words of that ilk, even if they possibly wouldn't do it with their own money, right? And that's an interesting gauge on how committed somebody is to something. Anything that we recommend to our clients is stuff that we use ourselves. And, if people are selling stuff that they wouldn't put their own money into, then that would sound alarm bells, I would think. The sales pitch can be very convincing. That's another reason. Like if you look at some of the flyers and brochures and the stats and the data and the claims that are made and the potentials that are positioned from some of these products, previous successful projects and outcomes and potential tax reliefs on investing if it's EII schemes, tempting potential annual returns, really good brochures, maybe landmark acquisitions in the past or whatever. And, and also, they tug on the heartstrings of look at support younger businesses to grow and become part of a community and all that good stuff. That can be tempting, right? And that can play into the decision, no question, whether it's subconsciously or not. In short, most investors, I believe, weren't greedy gamblers. They were regular folks who were a combination of A, looking for a better home for their savings, and or B, seeking some tax relief, and or C, wanting to invest in Irish businesses, and D, cajoled or sold a product, influenced to buy a product. So, what about unregulated investments in general? A few years ago, a client sent us an investment proposal to review, which they were sent by their accountant and tax advisor, right? It's probably the best way to explain it. The client who we were working at the time said, I got this. My accountant is saying I should invest in this. I was like, oh, okay, right. Let's have a look at that for you. On the surface, that looked absolutely appealing. The company and the firm and the people involved had a track record, apparently, of doing good stuff in this field. No pun intended here. It was very reassuring language in the brochures. It said previous projects, potential and expected returns. When you dig into it, it was an unregulated investment, no asset backing either, massive risk to capital invested. My advice was I wouldn't touch it with my own money, and I don't suggest you do with yours if that's something you want to do, by all means, but make sure you know the risks here, and let's find out a bit more about the fees that you'll pay as a result and the commissions that are going to be payable to your accountant. And the client went and had that conversation and steered clear of it. That was their decision to not invest. The client came back to me subsequently and said, Paddy, I am absolutely thrilled that we had you have a look at that, because the thing is in difficulty. Right? The project is in difficulty. Investors are likely not going to get their funds back. It is not working out. There's lots of reasons why these things cannot work out. The economic environment and interest rates change, the demands change in certain sectors, policies shift, and depending on the project, they tend to be very narrow. If things change that have a negative impact on that particular niche, and that can spell serious trouble. All right. Some people use the word Ponzi scheme or pyramids, relying on cash flow from new projects to keep other projects going and to keep investors paid their coupon, etc., depending on the structure. These things can become a bit of a house of cards potentially. But that's one prime example where we were delighted to have been able to educate the client on what they need to find out and the potential risks. And they went and did a bit more digging and made the decision to avoid. The essence of unregulated investing is that there's no safety net, right? And there's generally a lack of oversight and due diligence, potentially. Not to say that there's no oversight and there's no due diligence when it's unregulated, but there's no obligation to have those there. Whereas if you take a UCITS fund, right, highly regulated in terms of liquidity and custody of assets and safekeeping of assets and due diligence around all of that. Whereas with an unregulated investment, that does not exist. All right. If an unregulated investment fails under current rules and regulations, and your money is gone, there's no central bank cover, there's no ombudsman, there is no investor compensation scheme. So there's no recourse ultimately. And you can try go through the courts, which some are going through right now on certain projects. But that's in the lap of the gods. All right. If money isn't there, the money isn't there, and you can sing for it ultimately. The investor compensation scheme. So all regulated firms in Ireland pay the Investor Compensation Company, the ICCL. So we paid that invoice recently enough, I think, right? To fund that body and that protection that is there for investors in Ireland of regulated entities and funds. Investors in unregulated products and firms don't have that protection. And that's the reality. The central bank have warned repeatedly on this, right? And I say warned on it, they put out some material on it. They've done surveys on it. Have they done anything really tangible is the big question. Recent surveys found that there's a lack of awareness around unregulated investments for the investing public and what their protections are, and the fact that the Central Bank of Ireland have no oversight in regards to those unregulated investments. So there is a knowledge gap there for investors, but also an obligation on the central bank to do something tangible here to change this full stop, because otherwise it's just going to keep bloody happening, right? I said this has been going on 10 plus years, the liquidation and collapse of unregulated investments. And some work out, absolutely, some work out. People get their money back, and or they get a bit of return, and or they get some tax relief on the way in, but some don't. And there's a very real risk with that. And so that's, I believe, CCPC, Central Bank of Ireland have an obligation to do something tangible here. Like Irish households apparently have 150 billion or thereabouts in current accounts and deposit accounts, which is good. Don't get me wrong, for a country that was ultimately in poverty for many, many decades, kind of pre I becoming an adult. It's another day's work on the motives and needs to get these monies invested and people to get investing through regulated approaches. And Europe is pushing that agenda and forcing Ireland to act, and Ireland is slowly doing stuff. As they announced in the recent budget, they've done a little bit on the exit tax to reduce it from 41 to 38%. And that they've the roadmap for simplification coming down the road next year. But that's forced. That's being forced by the EU. So again, that's a slightly different topic for another day. If there is, every silver lining has a cloud, the issue around all that cash on deposit is that not everybody is happy with the rate of interest that demand deposit account offers, or even a 1-year fixed term offers at, in and around 2% before dirt. Are you keeping up with inflation right now? Probably not, depending on where you spend your money. Investors then see a brochure or they meet an advisor that says, here, what about this here? This is where you want to be. You could get into this club here. That's where the potential issues can occur, and potentially makes these people ripe targets for promoters of unregulated investments. And I'm not trying to make promoters of unregulated investments appear like evil mercenaries. Some say they are. At a minimum, there should be, in my view, very clear warning on these investment products that this is not regulated. It is an unregulated investment. There's no central bank cover. There's no consumer, there's no compensation scheme cover. There's no ombudsman comeback. You are on your own. And maybe pictures, like if you think about cigarette packets, when I was a young fella, cigarette packets looked class, right? You had your Carols, your Marlboro, all those, like really, really smart branding, of course. But now they're pictures of grotesque body parts. So maybe if you had pictures, if they're forced to put pictures of, somebody with their head in their hands at the kitchen table, after losing their shirt on an investment, or their partner giving them absolute yards about, investing in some unregulated investment and they losing their money. Would something like that work? I don't know. But certainly, very clear statements around, if you lose, if this fails or doesn't work out, you lose everything. I also think a requirement to print examples and to state really clearly examples of where similar investments have gone wrong. So, like, scheme that investors invested 100 million in 2020 is currently going through the courts and they're trying to get back cents on the euro, or something to that effect, just to show that these can and do go wrong. Your capital is at risk. That doesn't work, because that's on every fucking investment. And it's on investments where the probability of that happening is almost zero, right? Where it's also on investments where your capital is a much, much higher probability and possibility of going into the abyss. I think restrictions on who can sell and advertise and promote these products. Currently, Informed Decisions Limited, which is regulated by the Central Bank of Ireland, it could promote and sell unregulated investments, all right? And get 5% in the door for every 100 grand that we get invested in it, right? So if we get 10 million invested in something like that, that's a nice 5% or upfront on day one, thanks a million, potentially, on investments like that. That's really, really tempting for some firms, and so tempting that they can't resist. The issue here is that regulated investment firms can sell unregulated investments. I believe they shouldn't be allowed. They should not be allowed. If you're regulated, you can only engage, advise, recommend, and distribute regulated investment products. Then that clarifies things. If an investor goes to a firm and they are not regulated, then they know that the product they're buying is not regulated. If they go to a firm that is regulated, they will know that the products that they are buying are regulated. It's really quite simple. I don't know why that hasn't been done, or why it's not on the radar to be done. Somebody told me recently that they don't have the powers to do that. Well, who does have the powers to do that? And where are they? Transparency on commissions, right? So if that is done, then that takes care of it, I believe. But as well as that, transparency on commissions. If your broker or accountant is going to earn 20 grand upfront commission for getting you to invest 400 grand, for argument's sake, of your savings into an unregulated product, an investment, you should know about it, and you should be made aware of it at proposal stage. So when they put this thing in front of you, very clearly, whoever is selling this to you will get X on day one. That is what is in it for them. And that will make it clear for the investor, okay, this is possibly why they're saying it's a great opportunity, not because it actually may or may not be a great opportunity. That will remove an awful lot of the confusion, I believe. And what's worse for investors is that many regulated advice firms that have, and they're all obliged to have professional indemnity for their activities and their advice that they give, but an awful lot of them doing this unregulated stuff seem to not realize that their professional indemnity will not cover them if on unregulated investments, and which ones go, and if they go wrong, the firm is not protected. And so therefore the staff, people working in those firms, are not protected and are potentially exposed. Their jobs potentially exposed, and their clients ultimately exposed. This is a major issue. So what would you say about unregulated investments? For me, if you can't afford to lose it, don't put it into an unregulated investment. That might seem very conservative, unambitious, and sweeping. And I say it unapologetically, because you have no way of knowing which ones are good and which ones are absolute muck. You have no way of knowing. You can look under the hood and see what type of entities they are, who's involved, what the track record is like, what's the assets, what's the project. But who really knows what's going on? And plus, I rarely see the need for doing these. Rarely. Assuming, and on the basis that you can access a very well diversified and productive, low-cost global portfolio of the great companies of the world, where there is, for me, no fear about the return of capital, no fear about the long-term success and outlook for that investment, and no fear about you being on your own if for some reason something doesn't go according to plan. Why would you? Why would you bother with anything else? The expected future returns from all of these unregulated investment products that I've seen are no greater than the expected future returns from that. Right? That's the reality. So unless there is some major tax win, it's like, why the bloody head would I? Why would I touch it? And this brings me to fees. Like really, and sorry, in terms of unregulated, one other little point there. And it's not a little point. Unregulated investments are often offered by regulated firms, as I said. Even the providers of them, the company itself might be regulated by the Central Bank of Ireland, but they can produce a product, an investment product that is unregulated, right? And distribute that and sell it. So on the brochure, it might say, so-and-so investment company limited is regulated by the Central Bank of Ireland, which implies that the product is also regulated when it may not be. So ask if it is or it isn't and get that in writing. Very simply. Ask about commissions, ask for total transparency on the fees. They're the things that you must do in writing. And if you discover it's unregulated, then you make your own decision, of course, right? But you're going into it, hopefully, with your eyes wide open. The fees, as I said, we routinely get sent proposals by clients, sent proposals from clients to run the rule over them that they've received from their accountant, their tax advisor, whatever, to aid their decision making. We've nothing to do with these investments. We don't engage in them in any way. Our default is to recommend avoiding them, all right? And certainly shun any commissions that may be offered to us. We accept zero commissions on anything. If someone did decide to invest in one of them, that's their decision. We want people to know what they're getting into. That's our priority. And that will never change. So we frequently are asked to review proposals that clients are sent. 3 recent ones came across to share with you, specifics around fees. Okay. One was a 10-year investment where funds are phased into the investment. So you commit to X amount in year one for the next 10 years. So every year you're going to do X. And you have to stick to that commitment, otherwise you might not. The rules of the agreement is you might not get anything back. But the fees were clearly outlined. And use an example of a 500,000 investment. Total fees over the 10 years was 92,000. So just under 20% of the invested capital was taken in fees in that particular example. And given that this was an EIS fund in which this particular product was targeting 30% income tax relief, it's not lost on some people that the fees could possibly wipe out the entirety of the tax relief element of the investment, which was the main point of doing it. So you could round that total fee to approximately 2% per year. And given that there were performance fees on this particular fund, if the fund exceeds certain limits or certain returns, I beg your pardon, plus and returns the capital, the fee rate will increase from there. So it's kind of a 2%er, right, per year. For an unregulated investment. Another one was a 5-year investment where there was 3% placement fee on day one. This was paid as commission to whoever was introducing it introducing it to you and or selling it to you. So that was 3% placement fee and then a 2% exit fee on illustrative exit in 5 years of whatever is cashed out. But again, that was illustrated at 5 years, but it could be much further, possibly never. Depending on the actual exit from the investment. Total disclosed fee here, you could round to 1% per year. So quite a variance there. Another was a private equity fund that we reviewed for somebody. The firm's management fee was 0.75, investment management fee of circa 1.8, plus other 0.1%, plus performance fees of 15% of all performance over 5% per year. So you're looking here at a rounded kind of 2.5% per year and higher depending on performance. So given these are unregulated, capital at risk, speculative investments, there's no regulation around the fees or disclosure, so this may or may not be the full picture. That's what we've seen in recent times. What's my conclusion around it all? Is there a need for unregulated investments? Maybe. Is it something that I would do myself personally? Not a big fan unless there was a major tax advantage and it was money that I could absolutely afford to lose and was a tiny percentage of what we were doing. Maybe. But the collapsed firm names change, but the pattern doesn't appear to. It's the promises of, higher returns, guarantees in place with asset back this and that and the other, strong track record, very strong potential future returns. The results too often rhyme, money gone, little recourse, going through the courts, dragging on for years, lives and retirements potentially upended. Just generally speaking, don't see why you would bother your head. Quite frankly, why would you? And the saddest part for me, and no, sorry, that's not the saddest part, but the an unfortunate consequence of all of this, apart from people losing their savings, which is the saddest part, to be fair. An unfortunate consequence of all of this is that many people who would otherwise engage in advice hear or read about this stuff and assume that every advice firm is at it. And it's really not the case. It's really, really not the case. So people don't engage in advice and then potentially miss out from the benefits of advice and miss out on those relationships that they could otherwise have and the potential returns and financial future that they could have and the freedoms that they could have because of the stuff that's going on now. And also the lack of activity from the central bank around it all. It's like, why isn't there other stuff being done here? Why is this not changing by whoever can make the change? Reminds me of a Michael Jackson song, Make That Change. Before I start singing, do you want to roll the dice with your savings or not? That's the question. I know what my answer is. Anyway, I hope it's helpful. Maybe send it on to a friend of yours that you think might be loose around this stuff. And look at, if people make the decision to do it, that's their decision. But again, education is the key. Thank you very much indeed for listening. I do hope you enjoyed it. I hope I enjoyed making it for you. Thanks a million for continuing to listen. We're enjoying the podcast. We keep on rolling. We keep on rolling. Shut up, Paddy. Thank you very much indeed for listening. You're a legend.